Welcome to the Rapid Recap. I'm Sasha Evdakov, and today we'll be talking about calculating the projected move. So I'll give you some insight to calculating the projected move, the C to D leg, and give you some insight about that. Now, we won't go into detail about the A, B, C, D leg all the way, because that's something that I could probably spend 3 hours just talking about the A, B, C, D patterns. But in this video, I wanted to share with you how I calculate or how the calculations work for the projected move for the C to D leg. And those of you that have watched the technical analysis course know how to do this. But for those of you that are just getting started, you may not know or be aware of this, how to calculate a projected move or an estimated move. So first, let's get into some stock charts, and then we'll get into the calculations as we run across some of these stock charts. Before we get into the stock charts, I do want to let you know I did finish the computer part picking video and how to build and create your computer workstation, just how to purchase computer parts and so forth. So that's actually came out to be more like a mini course. So it's about 3 to 4 hours long, and we get into the nitty gritty of Apple computers versus Windows computers versus the different parts that you could use to create your computer, all kinds of different things. So it's like a mini course, and it's going to be absolutely free to those of you that are on the newsletter. And if you're not on the newsletter, then if you want that video, you'll have to be on the newsletter. So we'll launch that maybe not next week, but the week after. It just depends on the video scheduling and what's in there right now. I'm not really sure. So we'll have to take a look, and we'll look and see. So that'll be coming out probably in the next week or two, but it is finished. And then we'll also have that shorting book, the book about shorting, the 245 money-making strategies for shorting. That'll also be coming out probably towards the end of next week, and maybe a few more days for Amazon to actually list the book. So that is basically all getting wrapped up as well. So we'll go ahead and launch that soon. And I'll let you know when that comes out. But the book is not in color. It's black and white. But I think you'll get a lot out of it, even though it is black and white, because the charts, the patterns, they're really still apply, whether they're black and white or in color. Now, if we were to do the color version, it would probably be about $40 per book. And I think some people would rather have access to the knowledge rather than the color on the paper. So take the knowledge that you get with it, right? So in either case, let's look at some of these stocks and break this down. And in fact, I'm actually recording this video a second time because the software that I was using wasn't picking up the mic very well. So we're doing this a second time today. So bravo for me. And we'll just go through some of these stocks again and talk about them. And then we'll talk about the C to D pattern as we go ahead and through some of these stocks. So looking at the first one, we have SONC, Sonic Corp. I took a look at this one because we have this long chart pattern that's been extending for that support line. And that support line really has been held up for quite a while. It's been held up right here at this level, this level, this level, and finally it broke at that level. Now, if you were waiting for that break right now, you would be up about $1, about a $1.20, watching this gap and how this stock comes into the gap. So looking at this stock, so far it's moving well to the downside. We talked about it last week, and it's been in the critical charts. The volume is picking up. You can definitely see that right here. Nice heavy volume off the sell-off, off the highs. And when a stock is selling off the highs with heavy volume like this, that means be careful. Trouble is on the way. You don't have to wait for it to hit your stop at this line or this level. Just get out right away and don't worry about it. All right, next stock that we got, CMCM. We talked about this stock the last couple of weeks. Stock has been moving fairly well, but we did run into some trouble. We had more volatility right around this level in this region. So your initial entry point really would have been right here. And then if you missed it, you could have got in right here and took some profits in this area. But the stock became more volatile. And by volatile, what do I mean by this? Well, if you zoom in and get closer on it, you can see that the stock traded much tighter over here. On a price spread basis, we were moving just $1 here or there, maybe 30 cents. But once we started to break out, this stock started trading $3 here. We got $2.50 there. We got another $1.50 there on that move, $4 on that move. So that's from the lows to the highs of that day. That stock has increased volatility. And when that happens, you want to be always a little more cautious and pay close attention. So if you were in it long here, you're always taking profits as it comes to the highs. So if it came to these highs here and sold off, then the stock is acting weak. How is it behaving? It was acting weak. So in this case, you would want to take profits. If you didn't, you had another opportunity to take profits here at this level. That was your second chance to take profits. Okay. If you didn't, you missed it. Your stop should have been right there. And in fact, you probably could have went short at this level because the stock came back to retest that price level, that support and resistance line right here, and it rejected it and continued lower. So here at that level, we basically have $3 gain to the short side if you got in it somewhere around there. So far, it looks pretty good for lower prices. I would avoid it right now because, it broke that support line. There's no need to hope and wait and pray and see if things come back. All right, let's take a look at the next one. Next one, we have SERV. Okay, this one, take a look at the weekly. Overall, the weekly has been moving fairly well. You can see that trend line. And when you look at this one on this trend line, the longer term trend line, the angle is pretty good. When you have a stock that's exploding at this angle or even at this angle, it's a little over accelerated. All these angles are over accelerated. As you start getting to a more normal angle, that's what creates a healthy trend line or a healthy line. So now what you're doing is you're watching for these highs to break, and you can see the volume, the cluster of volume, all these volume spikes coming in. You can see it's picking up some speed in volume. So what you're doing is you're watching for that volume or that price level to break. Now, sometimes this volume clusters are harder to see, so what you may want to do is extend it. And now, as you look at it, you can see that volume was contracting, and now it's picking up. Now, we do have a few bearish spikes there that do concern me, and if you look at the daily, you can see those bearish spikes. So you're always mindful of this, that when you're coming into that stock and looking at it. And sometimes looking at this stock, you want to look at how much fuel is being put into the stock. Now, fuel is similar to a car, a gas tank. So if you look at all this fuel right here, think of it if you had a broken gas gauge in your car and you go to a gas station. When you're at that gas station, you go ahead and fill it up with your eyes closed for 25 seconds. How confident do you think you would be in order to drive that car 175 miles? You might be not very confident. Instead, what if you went ahead and held down that gas throttle, that nozzle, and filled your tank up for, let's say, 5 minutes? Would you be much more comfortable in driving that car for 175 miles? More likely you will be, because you're putting in more fuel and more energy. So you're always watching how much fuel and energy is coming into the stock, going out of the stock, what is it doing? And that's what you want to see. That's what you're always looking at. So if we take a look at our CNC example, here again, we're looking at the energy. We're looking at the volume, how much volume is coming in. So your gauge in the market, your gauges are right here. This is one of your gas gauges. This is another gas gauge. So you have volume and price. You have volume as a gas gauge and price. So that's really what it's about. Those are your gas gauges. It's pretty simple to look at when you know and understand how to read the gauges. Okay, so here's our A, here's our B, here's our C, and our D. Okay, so how do I determine this? Well, it's based on the swing point. What is a swing point? Well, something you'll have to discover here, but in simple terms, it's the lows where the stock changes direction. So the stock was going lower, and now it's popping higher. So the stock has changed direction, right? So that's our A point, okay? Now, we have our A to B. How do you know how far the A to B is going to travel? Well, it's based on what has happened in the past. Sometimes it's difficult to project, and many times these A to B moves are missed. The money leg and the most of your money should be made on the C to D leg. Why do I say this? Because it's easy to project. It's easy to read. It's easy to see. How do you know that? You're probably wondering, how do I know the C to D or how long it's going to run? Well, you take the measured move, you measure the distance between A to B, and you apply that same distance to C to D. Think of it this way. You're on a road trip. You're driving. You're going, and you got to your destination, your B point. Now your car needs to take a break. You got to refuel. So B to C. You waste some time at the gas station filling it back up, and then you continue moving further in time and moving to your next destination. That's what happens. That's part of energy. That's part of life. That's how it works. So what you got to do is the same thing. You measure A to B, and you'll get the estimated distance of C to D. So let's do that. So let's take a look at our example here. We take the lows. We go to A to B. We get about $13. And now we go to the retracement amount. So here, let's remove this so we can calculate it better. We go from here to the highs of the D, we get 11. Now, as we start approaching 11, this one was 13. As we start approaching 11, $10, let's just say $9. As you start approaching $9, wouldn't you think you should be taking some of your profits off the table? That is because you're reaching your projected move. You need to pull over and get some gas. Stocks won't run forever, so that's what you need to do. You got to pull over. Something needs to change. So in this example, stock reached its projected move, $11, and sold off at the highs. Now, we won't hit it perfectly. Do you think that in a car you always get 200 miles per tank or 400 miles per tank? No, you don't. Sometimes you get more miles per tank, and that is because you drive differently. There's more energy. Maybe the highway miles are different from the city miles, but the energy, you're looking at the energy. How much energy did you consume? And here we look at the energy consumption, 13 points. We look at the energy consumption here, 11 points. Okay, so a little bit different. Depends on the environment. Okay, sometimes you're going over bumpy roads. So always watch how that stock is moving. So that's how we calculated the C to D leg on this stock. Let's go over a couple more stocks, and then we'll do the ABCD pattern one more time with Apple. Okay, CNW. Let's take a look at the weekly. This one's a little bit harder to see on the daily. So here's the daily. The weekly is a little easier to spot. We had this stock coming back right here, second time, third time, fourth time. Stock broke here. There was your short. Continues moving lower. Nice high volume on the bearish side. So if you got in this stock, you would have been up about $2 to $3 right there on that short. Now, you could have also looked at the resistance line right there and shorted at those levels if you wanted to. Total preference, up to you. Whichever method works for you, that's the one you could go with. GRUB. This one again, ABCD pattern. So you could take a look and see what the projection is. So we got the A to B, 9.85 points. And here's our C to D. Okay, we're moving 10, 11 points almost on heavy volume. Now in this one, we continue to move lower. Why? Because we have heavy energy. We have huge energy coming into that stock. Okay, so pay close attention how much fuel is coming into it. If you look at the daily, you really have a lot of ABCD patterns here in this stock. So here's a little retracement. Here's a little retracement. Okay, so we really have the A point here. We got a B point here. Okay, we got a C point here, D point here, E point here. But again, these things repeat. So this could be your A point, then this could be your B point now, This could be your C point now, and then this could be your D point. Okay, so you can break it down to little movements. So if we did an ABCD pattern right here, take a look at how that works out. Let's just zoom in so you can see it better. Okay, so take a look. Let's just take that A to B, 4.4 points. Here again, how much? 4.81 points. Fairly close, fairly accurate, not exact, but good enough in terms of the stock market. Okay, so that's how that works. Okay, same concept, same principle, A to B, B to C, C to D pattern. All right, let's take a look at IMAX, selling off at the highs very well. Here again, our extended move to the upside, stock selling off at the highs. And when the stock is selling off at the highs with heavy volume, what does that mean? That means we have trouble. So the stock continues to move lower right here for multiple days. And if you got in at the appropriate time, you'd be up $3 to the short side. Now, you could look at this stock as an ABCD pattern. You kind of could. You could say that this is our A to B, B to C, C to D. Kind of. It's a little overextended C to D leg, but you could take a look at it that way. Everybody looks at charts a little bit differently, but you could look at it and say that, hey, that was our A to B, B to C, C to D pattern. Okay. Next one I want to look at is RDUS. This one's been moving well for higher prices over this last week. We've been following it for sure, and it's been in our critical charts. Radar's been flying off. This one, take a look. Volume declining, and then a heavy break on heavy volume right here. That was your entry point. If you missed it, you could have got in the second day, the third day. Okay, even if you got in at the fourth day right here, you would still be up $6. $6 you would be up, even if you were late. If you had 1,000 shares, you would be up $6,000. If you got in at the right time, let's just say right here, you would be up, let's say, 15 points. 15 points in just a matter of 13, 14 days. If you had 1,000 shares, imagine $15,000 in just 2 weeks. Okay? Right stocks, right time, holding for the right amount of time, taking profits into strength, watching these consolidation patterns, doing the right things, right stocks, right time, right place, holding, sitting tight, waiting patiently, allows you to capture some great runs. Okay, so nice heavy volume, good consolidation pattern, good entry right here. Stock went well, and if you sold it even right now, you'd be up $15,000 with 1,000 shares. Okay, think about that. Let that soak in for a little bit. Be patient. This business is about patience and then execution. Okay, all right, next one and last one, Apple. All right, so here we go. Apple's been moving sideways, and a lot of people look at this stock and they fall in love with their stock. They love Apple. Oh, I love Apple because it's so much of a company that people get emotionally tied to it. And for me personally, I don't really care to get emotional to a stock. It's not something that that really, I guess, motivates me to buy a company. I really look at the fundamentals. I look at the charts. And before I even get to the charts, there's a lot of other underlying things that I look at on the fundamental level. Now, looking at energy, looking at behavior, that's what our discussion is about today. And too many people trade this stock and many other stocks out there, such as Facebook, on an emotional level. This one trades heavy volume, 16.7 million just today. Came down, by the way, right here to this level and now is bouncing, but this was your support and resistance line. But a lot of people trade these stocks on an emotional level because they are companies and people get emotionally attached to products. We are a very consumer-based oriented society. We want new products, we want new things. And that's why people like to buy more new clothes, new cars. They want to show it off. It's all about that brand recognition. Now, if you know me personally, I don't really care for a lot of brand related things. I don't really care for spending money on these luxurious things just for society to look at me differently or better. I'll buy a couple of t-shirts here or there. Some of them are the exact same thing as I had before, and the same thing with my pair of shoes. They're usually the same, but I don't really care to buy all these different things in order to showcase what I have. I don't like that type of attention. I don't like that type of feeling. And if you don't know, by the way, one of the most polluted industries out there is actually the fashion industry. So you can go ahead and actually watch a movie called True Cost that really talks about some of the things and the clutter with that industry. So there's a lot of that clutter going on, and people get attached to this, to all the clothing, to the shoes, to the products. For me, I like to keep things simple. And I do that also with my charts, with my stocks. And that's why I'm able to be successful at what I do, because I keep things simple. I do the things that work and things that just make sense to me. Now, if it doesn't make sense to you, then you need to find what makes sense to you. But in this case, let's look at this stock. Let's break it down. Let's look at some of the other stocks that we talked about before and look at and apply the same concepts that we just applied to the other stocks. So Apple, looking at it from a close view, we're moving sideways. But as you start zooming out, you want to start looking at the chart. And sometimes it's hard to see, but take a look at this retracement over here at this level. And this is the weekly chart. But if we go to the monthly, now we start seeing some things. So now things might look a little different for you. So here, do you see the A to B, B to C, and C to D pattern? Okay, do you see it? Okay, so here, let me draw it out for you in case you're struggling to see it, which is okay. There's nothing wrong. We're all learning together. A to B. Okay, B to C. This is where the stock changes direction. So here's our C point. And then D, right here. So what I want to do is I want to measure the A to B. I want to measure the B to C and the C to D. So I want to look at what's the potential of that stock. Okay, so if I take the A to B and I go here to these highs, 82 points. Okay, so now I take this C to D. And I take the lows of C and I draw it all the way up. What do I get? 80 points, 79 points. So we're off by 4 or 5 points. Okay, nothing wrong with that. But in terms of the move, in terms of the relative move, okay, are we getting close to what we did initially, the energy? Yes, we are. Now, does this mean this stock can't go higher? No, it doesn't. What can happen is we can pull back like this slightly, or even to this level, the 100 level, and power higher again for another C to D leg. But for the time being, the stock is hitting its projected move. And when it hits its projected move, what do we know tends to happen? A stock pulls back, or it consolidates, or it does something else. Now, if you look at the longer term picture, what has been happening to this stock on the long term? The stock has been selling and consolidating in terms of the volume. The volume has been contracting. Okay. Now, what can happen is we can start increasing volume and picking up to the upside, or we can increase volume and go actually to the downside. And if that happens, oh, watch out. You got some trouble coming. But if we consolidate sideways, that would be healthy for the stock to move sideways like we are doing right now, sideways. A little more sideways action would be healthy. There's nothing wrong with that. So always pay close attention to how your stock is moving, how is it behaving, and what is the projected move. Because these projected moves tell you how much energy and gas is left in that gas tank. And once you start running out of fuel, you're going to have to pull over, or something's going to have to happen. So always be careful and mindful of where you are. All right, I hope you found this video helpful. Thank you so much for joining me this week. I know it's a shortened holiday week, so hopefully you're going to make the most of it, enjoying the fireworks or enjoying a little bit of time with the family, or just taking a little bit of day of a break. Again, within that next week and a half to 2 weeks, we will have that computer parts video, or just about selecting the computer parts. And then within also that next 10 days or so, we will also have the shorting book that will be released here very very soon. So keep your eye out for all that stuff next week. And, the course is really a great course about the computer stuff. So definitely, if you're interested to building a great trading workstation and great computer, or at least selecting the right parts for a trading computer, then that'll be for free. Multiple hours of a course for free to people who are on the newsletter list. And just my way to say thank you for sticking around and still sticking with me. Because I know there's some people that have been with me, the veterans, for multiple years now. So definitely, I hope you're learning a lot and trading well and doing well. And if you're not, and if you're new and you're just getting started, then feel free to just send me an email just to touch base and let me know where you're at. And maybe within a year or so, things will progress, and we'll get to see how things are going with you, and just to move your game to that next level. If you have any questions, so. Thanks again, and enjoy your weekend. Keep your eye out for some of those things coming out over that next 10 to 12 days, and hope you have a great weekend ahead. All right, and I'll see you next week. Take care.